Welcome back to the channel, everybody. I am Mick Alphaname. So let's begin here with this article on U.Today. There's a lot of news. We got a lot of articles today. This one here is titled, Ripple Unveils Major Report. Here's where companies spent hundreds of millions of dollars. It says here, the report highlights the area of financial inclusion, wherein Ripple has allocated $25 million since 2018 to support multiple NGOs dedicated to promoting global financial inclusivity and equity. When I hear that, I just know that for me, it means they're going to include themselves into all that unbanked money, possibly. Also, never forget the expansion, the rapid spreading of digital banks. Most banks will go fully digital. And they will need all the interoperability that they can get. They will need all the liquidity that they can get. That's another thing, too. We have a couple articles coming up later on that's going to go into depth. People better get ready. They better get ready. So we have a couple articles in chapters later where they're going to literally tell you there's about to be a problem with what? Commercial real estate. Expect more banks to get demolished. Possibly, but we'll cover that later. Let's continue on here. And that's one of the reasons we're going to dominate in the future. The banks, I mean, what exists now as what people know of as the financial system, they're destroying it on purpose at this. And like I said, that article is going to tell you everything you need to know. It's like there's like two of them. But let's continue on here. It says a total of 49 investments have been made to achieve this goal. Additionally, the report explores the topic of research and innovation regarding blockchain technology. Ripple has invested, get this, a substantial $80 million in bolstering blockchain and fintech education, which obviously is going to come in handy later. We want all the brilliant minds coming to us. Then it says research and innovation. They're sitting on innovation, in my humble opinion. Let's continue on here. It says, through initiatives like the University Blockchain Research Initiative, UBRI, Ripple has sponsored numerous fintech courses, totaling 433 new or expanded offerings. This also makes for a bright future for distributed ledger technologies, because the people that run the world in the future are going to be some of these individuals that are coming out of these universities. And in order to have things be better, in the future, you have to change minds. Unfortunately, you're not going to change too many legacy system minds. People become sort of set in their ways and concrete in their ways of thinking. If it gets at a certain age, it gets very difficult to change minds. So this is why you see a lot of this sort of stagnant mind state within the legacy system, where they're just messing everything up. And they were riding off of the coattails, so to speak, of their predecessors who, did a questionable job. But now we're starting to see the negatives of that come to fruition. Of course, one example, obviously, is overprinting the money, loose monetary policy, which just can't exist right now. It's making everything crumble, right? So in the future, you want to be involved in helping the minds that may control the future learn of the positive benefits of the new technology. And then, don't get me wrong, maybe we get some regulations now. Maybe we win this SEC case, and I believe that we will. But massive changes can happen in the future because the minds will be changed. All right. So, and then it says here, moreover, the company has invested $15 million in advanced market commitments for carbon removal. We covered an article about 3 weeks ago on carbon removal that a lot of people didn't understand. And I needed a little bit more clarity on that as well. There's technology where they're going to be making a ton of money. This is what they claim, where they're going to be pulling carbon out of the atmosphere and repurposing it somehow. This is what they claimed in the article. That industry is going to be generating so much capital. That's why, in my humble opinion, that's why a lot of companies like Ripple, Algorand, Stellar keep talking about how green they are. There's going to be a lot of money made through that. All the carbon taxing, you know the whole deal. Listen, these industries are money-making industries. Make no mistake about it. So I'm going to be keeping my eye on that, but that's very long-term stuff. But 15 million into that, of course, that's so Ripple can make some profit off that, make some money off that. They're getting in deep there. So now, let's go on to another article here. This article is from coinedition.com, and it's titled, XRP could potentially rally to 80 cents if bullish sentiment holds. Now, we covered an article where just like maybe the other day, they were saying, well, maybe it could rally to 60 cents. Now today, they've retooled everything, re-looked at the charts, and now these pros are estimated it could rally to 80 cents. Listen, of course, we're all looking for those big explosions that I know a lot of people disagree. You made it clear, but I believe there's going to be a massive explosion when that case is over. We can agree to disagree. I can respect those opinions. However, it is fun to see these little price actions. This is very fun, especially in this chaotic time period. But I will say this, they've gone from estimating 60 cents to 80 cents. I mean, what's the probability that probably by next week, they're going to estimate that XRP could hit 90 cents to $1? I don't think it's that much of a stretch of imagination that they're going to move to that. It says here, a crypto analyst in the trading view community, which is one of the most respected communities that I know of, right? Shared an incisive analysis of the XRP price. With a combination of indicators, the analyst predicts XRP could rally to 80 cents if it holds the current price level. What's interesting about that, I mean, earlier today, I don't know what it is now, but earlier today, it was still holding firm at 51 cents. I think yesterday it hit back to 52. Did it hit 52? I think it did touch 52, which means it was holding pretty strong at those particular levels. It says XRP continues to trade between 55 cents and 48 cents over the past few days, developing into a short-term sideways movement. Of course, I'm not really focused on these little small price actions, but like I said, it is fun. It's very interesting to watch in these very chaotic times. So now let's move on here. All right. Don't need to linger on that for too long. We have so many articles to get through. This article is from cryptonews.net. And it begins here. It says XRP enthusiast and crypto lawyer Bill Morgan has highlighted a monumental day for cryptocurrencies based on upcoming events. Morgan noted that Binance's response to the motion of the SEC for temporary restraining orders is due on June the 12th, with a hearing on June the 13th. The Binance response to the motion of the SEC for temporary restraining orders due on June 12th. Okay, and then they reiterate that. It says a monumental day for crypto, the day the Hinman documents are to be released. Let's hope that those Hinman emails contain something within them that's going to take the head off the SEC. It says, interestingly, the date for the hearing, June 13th, coincides with the day the Hinman documents are to be released and the day the House Financial Service Committee will discuss the future of digital assets. Morgan refers to this date as monumental for crypto. It definitely is going to be that. The XRP enthusiast highlights the possibility of another crucial event coming up on the aforementioned date, but memory fails him. This week, the SEC filed 13 charges against the Binance Crypto Exchange and its CEO that we know about. Listen, let me throw something else in there. Be careful with some of these banks. We have a lot of great subscribers around the world, and it looks like the war on crypto and the great shakeout is kicking into high gear. Be careful out there. And why do I say that? Some of these banks are beginning to once again limit transactions going to and from exchanges. The one I can remember off the top of my head, there's maybe one or two banks in Australia. We have a lot of great subscribers in Australia. So just be careful of that. If you need to look into that, look into that. They're limiting what you can do on the exchanges from your accounts with your money. You can look that up for yourself. Okay. So it says here, the SEC also moved to obtain temporary restraining order to freeze Binance US assets that we know. I'm not sure if that's taken effect as of yet. It says latest developments in Binance Coinbase lawsuits. James K. Fallon recently shared the update that the SEC versus Coinbase case has been assigned to Judge Jennifer H. Reardon in the South District of New York. Okay, so now we have a name for that. Coinbase's chief legal officer, Paul Grewal, also provided the update that the Third Circuit has issued a short order in Coinbase's mandamus action. The court noted the SEC suit against the exchange and asked the regulator whether this implied it had decided to deny the pending petition for rulemaking. I believe Coinbase had, they asked the courts to force the SEC to provide clarity. And it doesn't seem that Coinbase is going to back off of that. This could be very, very good. So we continue to keep our eyes on that. So now this next article here is from CryptoRank.io and it's titled Binance US Coinbase under pressure to relist XRP following SEC suit. And it goes as such. The recent lawsuits filed by the U.S. Securities Exchange Commission and against Binance and Coinbase, my apologies, I read that completely wrong. Filed by the U.S. SEC against Binance and Coinbase have sparked a renewed push for the relisting of XRP, with prominent figures and crypto influencers urging the exchanges to reconsider their delisting decisions. I don't know that they're going to do that. It says the call for relisting XRP gained traction when Coinbase CEO Brian Armstrong said the exchange would not shut down its staking service despite facing legal action from regulators. In response, Ben Armstrong, a well-known crypto influencer not related to Coinbase CEO, tweeted, #relist XRP Uncle Brian. Okay. Plenty of people have been asking for a long time for them to relist. They haven't done it yet. There's other reasons why they're not relisting XRP. People just don't want to believe it. I mean, you can believe what you want. I don't know the truth of it, but there's other reasons, obviously, that they're not listing XRP, right? They're going to keep staking. Just do the math on that. XRP is bigger than what people want to believe. People just want to believe XRP is a regular crypto, not understanding banking money is tied up in there. When you're dealing with bankers, that's a completely different level of capital, a completely different level of corruption. People will do anything for those trillions to control those trillions. The people at play when you're dealing with banks, bank money, bank coins are completely different. This is why they're treated differently. Look at all the bank coins and look how they've been treated, right? You'll see some suspicious activities. I won't go too deep into that. Just take a look for yourself, right? So I don't think that they're going to do that. It says the post Binance.US Coinbase under pressure to relist XRP following SEC suit. Twitter user Crypto Assets Guy echoed a similar sentiment by addressing Coinbase directly and questioning whether it would delist all the alleged security. Listen, they didn't do it before. Didn't they? The SEC last year released a list of coins that they alleged were securities. They weren't delisted from, at least not from Coinbase. They weren't delisted from Coinbase. Some of them are, I believe, still on Coinbase. So they didn't do it then. We'll see what happens now. Maybe something different happens now. I just know what is, right? So now, let's move here to this next article. This next article is from thecryptobasic.com. And it's titled, Top Lawyer Kicks Against Crypto Tribalism, Criticizes Coinbase for Not Supporting XRP Secondary Market Sales. I mean, you can criticize all that you want. I don't believe that Coinbase is going to take actions because of criticism from anyone. But let's read this little tidbit here. It says, prominent Australian-based lawyer Bill Morgan faults Coinbase over its decision not to support XRP secondary market sales. The pro-XRP attorney said this while expanding on an earlier remark in which he called out the American exchange for inconsistencies. Quote, it is not smart for exchanges like Coinbase to continue not to allow secondary trading of XRP, unquote, Morgan said in a tweet today. He says, I agree generally, but it is not, they reiterate what he said there. He says, and I took a passage from Coinbase's response to the Wells notice and showed the assertion Coinbase made was totally inconsistent with his behavior towards XRP. Once again, why do you think that is? You have to put two and two together. Something's wrong there. Listen, people from the beginning, the hardcore diamond hands XRP people have known from the beginning, at least they've said this from the beginning, that they never wanted to have retail be heavily involved with XRP. It was I had this thought that retail was just a necessary thing at the time for certain reasons, right? But it was never supposed to be a permanent thing. So listen, obviously there's something going on behind the scenes where XRP is treated differently. It's very special. Why do you think that they got attacked first? XRP got attacked first. There's got to be a reason for that, cause and effect. But if we win this case, the XRP is also in the clear. You've heard many people say that as well. They're in the clear. Do you understand what that would mean? And it would just be XRP and other bank coins that are like this with XRP because they all have pretty much the same use case, right? They would make a run the likes of which nobody has ever seen, just my humble opinion. And who do you think they want that wealth in the hands of? Not the regular people. I wouldn't consider you and I regular. We're not regular at all. But they don't want those regular people in there. Haven't you seen all the articles of lately? You've had all these people from Jim Cramer to, I have an article here. Former SEC officials telling people, literally telling them to get out of crypto. This is in the last 2 weeks. They've been slandering crypto, telling people, hey, crypto is bad. Get out of crypto. Sell your crypto. This is what they've been telling people. And people have been. They have. So many people are gone. Why do you think that is? This always happens right before something explodes, just like when the internet took off. Wait, let's push that to the side. As a matter of fact, some years ago, and we covered these articles here on the channel, so it's fact. You had individuals who now praise Bitcoin, right? A year before Bitcoin had its massive explosion in that last bull run, about a year or two before that, those individuals were calling Bitcoin trash. They were saying it was horrible. You shouldn't have Bitcoin, right? Only for those individuals to do video interviews a year or two after the bull run. No, it was a short while after the bull run. And it was a year or two after they had done the video interviews anybody can watch, and they had said Bitcoin was trash. They did new video interviews saying what? They were asked if they had Bitcoin, and they rained praise on Bitcoin and said they had tons of Bitcoin. You see how that works? They trick everybody else using their weak fake authority, and they scare you away. Everything plummets in price. It goes down. They buy up everything quietly. Shh. They don't have to buy it all at once. They can buy it in small increments by proxy, right? Then they wait. Then everything takes off. And they make the billions, millions, billions. This is the way they always do it. So, I mean, isn't it interesting that they're all coming out? You can look this up. Jim Cramer, whoever this former SEC official, just type that in. Former SEC official says, what do I have it somewhere? Here it is. I'm going to give you the name. Former SEC official John Reed Stark is telling people to get out of crypto now. Now, make what you want of that. That's all I got to say about that. Make what you will of that. But this always happens. So XRP is different. First thing my brother told me when I first got into crypto, he said, hey, Mick, this is a bank coin. They don't really want. It's not really for retail. Something like that. I don't think people know what they hold. We talk about it. Listen, people have said it's crazy when I talked about, what did I say? Did I say $25 to $35? I think, was that the highest that I discussed? That's nothing compared to what I think XRP could really do. I've never put out my high price. But they said in mass to $25 to $35. They said that's insane. I don't think people really know what they hold. The possibilities. There's no guarantees. I'm not in charge of Ripple. I'm not in charge of the banks. I'm not in charge of the government, and all these entities are making moves. All I know is potentiality. I'm just a humble researcher. But right now is the fire. People are walking through the fire. Only a few going to make it through to the other side. And if that potentiality is realized, whoa, Nelly. Boom. It's happened multiple times before. May happen again. So now let's move on to a little bit of Stellar news, a little Stellar XLM news, related news. So this is from Stronghold. Did you see this video? It's on their YouTube. Listen, something big is going on. Something big is going on. Listen, it may take 2-3 years. I don't know. I'm not in charge of these companies. But you got BPV making these massive moves on Stellar. Then you got Stronghold saying something like this. I'm going to read this to you. This is very short. It's a video, but I have the transcript pulled up here. It says, Stronghold, it says, at the heart of our ecosystem is Stronghold Net, which operates as both a product and a network of participants. And that includes merchants, technology partners, consumers, and other key players. Who's those other key players? But let's keep going. It says, when you integrate with Stronghold Payments infrastructure, you can benefit from its innovative capabilities and services. Oh, that's so nice. We're going to get to it. Don't worry. We're getting there. It says, we've already implemented our payments and rewards features. That's not the major thing, but that's good also. Payments and rewards, incentives. Let's keep going. Rewards features for our merchants. And we've just recently launched a promotions tool. That's also good. Let's keep going. That's not it. Let's keep going. It says, our team is thrilled with the addition of the promotions tool as it brings us one step closer to enabling SHX rewards and payments for end consumers. And we're excited about the possibilities it presents for our merchants and its customers. Our team is working tirelessly to expand the capabilities of Stronghold Net. Pretty much Stellar, right? They remind me of Quant. I said this before. They remind me of Quant just on Stellar. But let's keep going. It says, we're excited to announce the expansion of our merchant financing program. Some more. They got more, right? Which is now powered in part by DeFi funded cash advances. That's not it. Let's keep going. They just keep dropping more and more and more. Look at what these companies are doing, but let's keep going. It says, this means our merchants can access funding more easily. Here we go. Get ready. I told you that they're sitting on innovations. They can do more than they're saying. We're not looking beyond. Here we go. It says, this means that our merchants can access funding more easily thanks to the benefits of blockchain technology. Here we go. We are also expanding our support of the ISO 20022 standard to include revenue recognition. They're expanding. It says, which will help businesses better manage their finances and comply with regulatory requirements. Now, I know there's a lot of mixed feelings when people hear ISO 20022. I reference you to Volante Technologies, a respected utilizer of the XRPL of RippleNet, a respected Ripple partner. They put out two massive documents that were literally called the importance and significance of ISO 20022. I encourage you to read it. Volante Technologies. Then you make up your own mind about the importance of ISO. I'll leave it at that. But here you have Stronghold using Stellar. And they said, we are also expanding. They began here using ISO. They're saying we're going to do more with ISO. Hey, I don't know all the details of ISO. We are also expanding our support of ISO 20022 standard to include recognition, revenue recognition. Big things are happening. You don't see the correlation? All of this activity on the XRPL, all this activity on Stellar, all of this activity on Algorand, and the SEC, the attack dog of the antiquated, archaic legacy system, attacks everybody at this time when we have so much going on. And they're chasing all the people away when all this big stuff is happening. When, at a time when so many pros, economists, and top analysts, quote unquote, are calling for a bull run at some point. So you have all of this going on, all these advances, and all of these innovations, all of these expansions, all of these acquirements of new companies and such, and all of these pros calling for a bull run coming. And the SEC just decides to start decimating, just ground and pound, just hammering the industry. You don't think that's a little strange? Maybe I could be wrong. Maybe someone knows something is coming. Maybe they're loading up. Why do we keep getting these reports that there's so many different whales loading up? Who are these whales? Right. Who's loading up? Why are they loading up? We've seen article after article of an explosion in addresses, mostly on the XRPL. But I'll go out on a limb and say maybe there's a slight increase in addresses elsewhere, possibly. But let's say that's the case. Why now? Why? I've seen so many people leave, but yet they're saying in the articles and everywhere they're saying this, that addresses are increasing. So who's coming in? What are these new addresses? You think companies might have a couple proxy addresses? You think banks might have a couple proxy addresses? I don't know. I mean, I'm asking the question. I don't know. I'm just saying it's interesting. It's suspicious, isn't it? They always chase everybody away before things go off. And it doesn't have to be soon. It could be in a year, it could be in 2, who knows? But they make sure they desolate everything. They chase everybody away. But let's continue on here, okay? That's interesting. So now, so then I want to skip this. This is the article where the SEC guy says, get out now. I'm not even going to read that. I just had it there for reference. So now we're going to go here to an article on Cointelegraph.com. I had to delete a couple articles here. I want to skip those. We have so many articles. This is from Cointelegraph.com and it's titled Circle hires former CFTC U.S. Treasury executive as chief legal officer. You know, I might as well consider this XLM related news since Stellar is the biggest pusher of USDC. Then you had yesterday, we covered an article in that video yesterday, the evening video. If you didn't see that, check it out. Because it has more detail. Obviously, I read a little bit of the article. But I think it was yesterday where, was it Circle? Or it was Circle, I believe, not Coinbase. It was Circle or Coinbase, one of them. They're dealing with the Monetary Authority of Singapore, right? Can you imagine? Look, everything that they do is based on USDC, right? Circle. Now, can you imagine if the Monetary Authority of Singapore is doing something major with USDC and they're using Stellar wallets? Something I keep in mind. So now you have Circle USDC, which obviously has a heavy impact on Stellar blockchain. They've just hired a former CFTC U.S. Treasury executive as chief legal officer. It says here, Heath Tarbert will serve as the company's chief legal officer and head of corporate affairs. So stablecoin issuer Circle has loaded its arsenal to fight the ongoing regulatory crackdown on crypto. By July 1st, the role of chief legal officer and head of corporate affairs will be filled by Heath Tarbert, a top attorney with a background in all 3 branches of the United States government. It's getting interesting out here, folks. According to a June 8th announcement, Tarbert has served in a leadership position in all 3 branches of federal government. They just brought in a cannon. Because didn't the SEC say they also were looking to go after stable coins or something? Like, they're absolutely insane. Well, one of their own has been brought in to fight them. Unbelievable. Good move on Circle's part. It says here, Tarbert he's served in all 3 branches of government across key regulatory agencies, including Commodity Futures Trading Commission, the Internal Organization of Securities Commissions, the U.S. Treasury, the Financial Stability Board, and the World Bank Group. This individual has some power. World Bank, he has some power. Says he also served as special counsel on the U.S. Senate Committee on Banking, Housing, and Urban Affairs. Unbelievable activity happening as of late. The war rages on. It's looking good in our favor. We just have to keep fighting and don't give up. It says, quote, the opportunity to welcome Heath's expertise and leadership to our executive team is an extraordinary step in Circle's growth as a global company. Quote, unquote, said Circle CEO Jeremy Allaire. Tarbert's arrival comes amid renewed regulatory uncertainty around crypto in the United States. That we know about. We're going to stop right there. Let's move on to another article. All right. Probably have about 8 more articles, so I'm trying to get through as many as I can while keeping it brief. It says here, so this article is from Bitcoinist.com and it's titled Mark Cuban on Coinbase Crackdown. No one trusts the SEC. So this shows you how many people have a problem with the SEC, from Mark Cuban to to Elon Musk. I mean, these are very different individuals, very different. To crypto companies. I mean, everyone has these problems with the SEC. So it says here, outspoken Dallas Mavericks owner and occasional crypto enthusiast Mark Cuban, very light enthusiast in my humble opinion, has taken to Twitter to express his concerns over the U.S. Securities and Exchange Commission's handling of the recent complaints against cryptocurrency exchanges, specifically Coinbase. He warns that, quote, no one trusts them, unquote. But why not trust a branch of the U.S. government that is designed to protect investors? Because they don't protect investors. That's a facade. That's not true. What they say and what they do is two completely different things. It says here, like, why? I don't understand questioning like that. Oh, it just blows my mind. Let's continue on here. It says Mark Cuban slams SEC versus Coinbase. It says Mark Cuban, a longtime advocate for cryptocurrencies, expressed his frustration with the SEC's approach, stating that the regulator could have outlined a clear plan for compliance. And that's a problem. They didn't. They've never done it. Even Robinhood, even they said, hey, we tried to come in and comply with them and we couldn't figure out what to do. They had no answer for us. We couldn't do anything. Robinhood even said that. So it's clear across the board that the SEC has not provided any clarity. You can't really register with them, or you can't register with them at all. Companies don't know what to do, and all they are doing is destroying companies and collecting revenue from them. That's all they're doing. That's it. It is a corrupt organization meant to hamper and kneecap the industry. They are the attack dog for the small group in the legacy system that is afraid of crypto. Don't get me wrong. A huge swath of the legacy system wants to congeal with us, but it's not all of the system. They are the pit bulls for the small part that wants to rebel against us and take us down, right? So I think everyone is starting to see that. They're getting exposed. So now, it says, instead, he accuses the SEC of preferring litigation over providing guidance to businesses like Coinbase. Well, I think Gary Gensler made it very clear when he made that quote the other day. You read it? When he said, well, we don't need crypto. I hope that wasn't like just somebody typing that in an article, because it was in quotes. And it said, quote, we don't need crypto. We have the dollar. That tells you everything you need to know. That tells you corruption is there. What do you mean? So you say that you're pro innovation, but then you're going to say that we don't need innovation because we have something archaic and puffed up and propped up like the dollar, a fiat currency, which means nothing. That's just my humble opinion. That's my humble opinion. It's not backed by anything, right? So most people are living off of interest. They're living off of interest. Most people living off of interest, and most people they're protecting their value with precious metals. Anyway, they're protecting themselves. They're protecting their wealth and their value. You have to when you're dealing with fiat currency, a fiat currency that's been weaponized around the world. And you, like, for the first time ever, you have countries taking real steps towards de-dollarization, including countries in Europe. So you have to take that. This never happened before. So you can't compare to what was before. So the SEC protecting anybody is a complete lie. They don't do that. So then we have this information, bombshell dropped. So much big stuff. This is from Cointelegraph.com. And it's titled, SEC's Gensler offered to serve as an advisor to Binance in 2019. Lawyers claim. So this is reputable, okay? It says here, years before serving as head of Securities and Exchange Commission, Gary Gensler offered up his advisory services to Binance. Listen, so he wanted in. So an exchange that he says is bad and they're doing all this bad stuff, he wanted into that exchange. He wanted a piece of the pie. Then don't forget, didn't they say that Gary Gensler had multiple meetings with Sam Bankman-Fried, but they never did anything to FTX? That showed, why do you think that is? That's corruption. We're going to defeat them. We just have to keep fighting. We're going to beat them. There's too much there. It's being seen now. It has to be brought to the light. I mean, the rest, everything else will fall into place is what I mean. They're getting exposed left and right. Let's continue on here. It says United States Securities Exchange Commission Chair Gary Gensler once offered to serve as an advisor to Binance. Lawyers representing the crypto exchange and its founder, Changbin Zhao, have alleged. According to a June 7th CNBC report, documents filed by the SEC on June the 7th indicated attorneys from Gibson and Dunn and Latham and Watkins alleged Gensler offered to serve as an advisor to the exchange in March 2019. Now, if that had happened, you think he would be going against Binance right now? It says, however, in any capacity. It says, however, a previous report from the Wall Street Journal in March indicated that Binance had actually approached Gensler first in 2018 for the advisor role. Really? And you trust the Wall Street Journal? Look, their business section has some okay information, but all right. Look, I'll go by what lawyers are saying. Lawyers. How many? It says indicated attorneys. Gibson and Dunn, Latham and Watkins. So attorneys, so multiple, it says attorneys, multiple have corroborated that he came to them. But, okay. It says, according to WSJ, which cited messages and documents from 2018 to 2020, Ella Zhang, who was the head of Binance's venture investing arm, and Harry Zhou, co-founder of Binance investing firm Koi Trading, first met Gensler in October 2018 to offer him an advisory position. Gensler, yeah, but was it solicited by Gensler? They can have a meeting. They can come to a meeting with him. It doesn't mean he didn't solicit it. Gensler later declined the offer. Really, are you sure about that? The lawyers say opposite. But let's keep going. Additionally, the report claims multiple private companies approached Gensler to serve as an advisor while teaching at MIT, but he declined all the offers. Why only him? See, that doesn't make any sense to me. There's a lot of brilliant minds that were out at that time that people could have approached. Maybe you could say they did approach him, we just don't know about it. But we will see. We will see. A lot more information will come out. It says he declined all offers. You sure about that? Really? United States President Joe Biden nominated Chair Gensler, the SEC, in February 2021. He was sworn into office. Keep in mind, this is the same Gensler that was drooling over Algorand. It was drooling over Silvio McCauley, who now, he says Silvio McCauley's company has done illegal activity, but was praising Silvio McCauley. The same Silvio McCauley that's still winning awards up to last month around the world. Turing Award winner, Silvio McCauley, much more brilliant than Gary Gensler, who, what awards does, accolades? I'm not trying to disrespect Gary Gensler, but what awards does he have? See, there's a lot, in my opinion, there's a lot of jealousy going on. A lot of power grabbing because maybe Gary Gensler doesn't like that. Everyone left him in the dust. They invented something. They invented something brilliant that's changing the world. They're still getting awards. Like I said, awards to this day. And Gensler was left behind. So what does he do now? Now he tries to control that industry, punish them. He's angry, upset. That's in addition to other things that happened to him in his life long ago that may have mentally scarred Gary Gensler and made him a very bitter and angry individual. You can look up his biography and learn about that. But let's continue on here. All right. All right. So now this article here is from thedailyhodl.com and it's titled Dedollarization now evident as central banks' US dollar reserves drop to record lows. Oh, there's a lot coming, folks. Like I said, now we're getting to the articles I was talking about. This video may be a little bit longer, but if people have watched to this point, it's getting potent right now. Better prepare. It says financial behemoth JP Morgan says the trend of de-dollarization. So banks are holding less dollars, but let's keep going. But what are they holding more of? Gold. Why? What do they see that's making them hold less dollars, but they're buying record amounts of gold? Says JP Morgan says the trend of de-dollarization is gaining steam as central banks around the world unload their US dollars. This is why a lot of us are into that gold. Universal currency, baby. Gold, silver, platinum, a little palladium here and there. In a news report, JP Morgan strategists Mira Chandan and Octavia Popescu say that the dollar share in central banks' foreign exchange reserves has dipped to 58%, a record low. They know something's coming. So JP Morgan analysts also say that the trend of de-dollarization becomes more evident when accounting for the fact that central banks have been heavily accumulating gold. I just said that. They're heavily accumulating gold. Why? There's only one reason you start stacking up on gold is because you don't trust the dollar. And you want to protect your wealth. Says heavily accumulating gold over the last 5 years. Chandon and Popescu say that in half a decade, gold's share in reserves has risen 11% to 15%. In my holdings, it's risen way more, baby. Oh, yeah. Oh, yeah. I don't trust the dollar. I use the dollar when I have to, but I don't trust the dollar. So last month, banking giant UBS said the central banks plan to accumulate 700 metric tons of gold. Leave some gold for us. Now I got my gold. I'm getting some gold. I'm all right. I'm okay. I'm getting some more. It says 700 metric tons of gold worth $48.74 billion this year as countries shy away from the US dollar due to geopolitical concerns and persistent inflation. What happens if almost nobody's using the dollar? What happens? What happens in the United States? You tell me. You know what happens. All those dollars have to come back home. Chandon Popescu and add that the de-dollarization trend is likely to continue even though the US dollar is managing to maintain its large footprint. That's just power. It's power related. But there's a lot of dollar dumping going on. You got to take that into account. You got to clarify what you mean when you say large footprint. Power, you mean it's actually in use still widely? You got to clarify that. In settlement of global trade, according to the bank strategists, the dollar and the euro share in trade invoicing have remained stable over the past decade, 40 to 50%. Okay. Meanwhile, the dollar share in foreign exchange trading volumes is close to its all-time high, 88%. Now, let's move on here because I want to get to this article. There's one here with Janet Yellen. So this article here is from globest.com. It's titled Treasury Department Gets Its Giant Liquidity Vacuum Ready. They're going to pull a lot of liquidity out the economy soon. People better get ready. So how this comes into play for CRE, commercial real estate, is because investment funds are finite and interest rates are shorter terms. Treasuries are attractive. As recently closed auctions show, a batch of 2-year notes issued on May 31st carried an interest rate of 4.250%. The 26-week bills issuing tomorrow are 5.483%. Is virtually guaranteed, which will set off two dynamics. The first is that a lot of investors, this is the important part, a lot of investors will pull cash from banks, leaving them even more starved for bank deposits than has been the case lately. So they can invest in what the Treasury is offering. Banks which have hunkered down with higher commercial real estate loan rates and lower LTVs will have even less money available. What do you think that might do? People have to watch the banks. Or don't. You don't have to, but they're still in jeopardy. Commercial real estate alone is putting a sword over their head. Now you have the government, the U.S. Treasury, putting another sword over their head. These banks are going to be under immense pressure. But I understand what the U.S. Treasury is doing for their own sake. They have to. Let's go on to this next article here. We're almost done. We're almost done. This is important stuff here. So this article is from biz.crast.net and it's titled Treasury Secretary Yellen warns of commercial real estate issues that could strain banks. So they're even telling you themselves. So it's not questionable. This is a fact. I've been saying this for months. Haven't I been talking about commercial real estate for months? Now you have Janet Yellen telling everybody, hey, listen, commercial real estate is in trouble. The banks, which means what? That means the banks are in trouble. It says here, quote, I think, this is from Janet Yellen, quote, I think there will be problems with regard to commercial real estate, unquote. Treasury Secretary Janet Yellen said in an interview with CNBC's, quote, The Squawk Box. So now you have a place where you can go find an interview. Says Treasury Secretary Janet Yellen warned Wednesday in her first interview since Congress lifted the U.S. debt ceiling cap last week that banks could feel strained by their risk exposure as commercial real estate valuations weaken. Be careful with these banks, but also it's great for the new financial system because they're going to need us. This tells you one reason why. They have a liquidity problem. They're going to need everything that we offer. They're going to need the new financial system. If these small banks want to survive, if they don't want to congeal with the bigger banks, if they don't want to be dominated and taken over, if they don't want to have their feet stepped on, they've been complaining to the central banks for a long time. And nothing has been done. You think that they don't want to survive? Of course they do. But let's keep going. It says Yellen was asked by CNBC's, quote, The Squawk Box host, Andrew Ross Sorkin, if she was concerned about the state of the estimated $20.7 trillion commercial real estate market, particularly office space, and if weakness in the sector could potentially lead to more bank failures. Then she said, quote, well, I think there will be problems with respect to commercial real estate, unquote. That was her answer when they asked her about more bank failures. So to interpret, and it's just my interpretation, she just said, yes, there will be more bank failures. Now, of course, we will have to actually wait and see, but the probability is very high, in my humble opinion. So now we're going to end off here with a little bit of gold news. And it begins here. This is from kitco.com, one of our favorite websites here to get gold news from. Make sure to check them out. This article is titled, Gold Prices Touch Session Highs as U.S. Weekly Jobless Claims Rise to Highest Level Since October 2021. Yes, gold was looking great today. Silver as well. Check out the charts. So momentum in the U.S. labor market continues to slow, with the number of American workers applying for first-time unemployment benefits pushing back to its highest level since October 2021. Thursday, the U.S. Labor Department said that weekly jobless claims rose 28,000 to 261,000, up from the previous week's revised estimates of 233,000 claims. The latest labor market data significantly missed expectations, according to consensus forecasts. Sorry, I'm running through these sentences. I'm trying to get it done. Economists were expecting to see jobless claims rise at a much slower pace to 236,000. The disappointing employment data is providing some bullish traction for gold as prices trade near session highs. August gold futures last traded at $1,969.60 an ounce, up 0.58% on the day. The 4-week moving average for new claims, often viewed as more reliable measure of the labor market since it flattens week-to-week volatility, rose to 237,500, an increase of 7,500 claims. Sorry, there was a little typo there, from the previous week's revised average. Okay, so bottom line, gold and silver were looking very, very good today. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.